It's been a bit of a crazy week in the market. Today I want to show you how I reacted to it, what things I'm doing in the market right now, what strategy works for me, and a bit of advice on how to deal with it. If you're not used to these kinds of crazy times, this will be useful. Let's dive right into it. Alright, I've been traveling the whole week in Thailand, been to these really cool resorts in the south of Thailand in Krabi, and then after that in Khao Lak, which I am currently now. We have a nice pool villa, which is good to relax. Kind of take some time away from the market to just step away from all this craziness. It's been a really tough week, the past week. Alright, so I want to show you here my account is currently at $522,000. It's been more than that. I think the highest I've been to is $542,000. So it's down about $20,000 today, but it's been a bit less than that usually. Daily P analysis is yesterday. We had a little bit of a drop to 523,000. But like you see, this is all unrealized P&Ls, just all P&L that I've accumulated over time, nothing really crazy. On this account balance, not a big difference, of course. 20,000 is only about 4% of the account, which is not too bad, it's very reasonable. But I want to show you why that doesn't bother me. First of all, because it's a small amount of the account. I never risk too much on the account. I'm not someone who's going to gamble and like put all my money into a trade. This is a portfolio I've built over time. You can see the portfolio has a lot of positions. So I have a mix of long and short, which means that I'm never really kind of losing all my positions. It's all like some are losing, some are winning, but overall I'm able to kind of control my losses that way with a low risk and also a good division of shorts and long positions. So that makes a really big difference. We'll have a look at some charts in a second here, but the other thing I'm not worried about too that really helps me with these conditions is that we're going to see prices go down in multiple assets and give us plenty of opportunities for pullbacks and re-entering back in the market at a lower price. So things, for example, like Spotify, which I've been out of for a while, are crashing this week. And we'll have maybe a good chance to go back and go long in this market with a much better price that we had for people who missed the trend. I've been out of this stock for a while, all the way up to around here. But this has been a really good kind of stock to hold and to trade on the daily charts or weekly charts. Now, the other thing that really helps me a lot is that all my trading now is based on the whole moving average. I have some strategies that are trading Forex that are not based on that, but in stocks, where really this week is the week that's most down. All the strategies I trade are based on this indicator here. So I'm going to hide this over here just to make this a bit better. I had this right here. And what this does is that if price is trending up, we'll see my custom indicator, which I've built myself based on the whole moving average, is going to be green. So you see when it's trending up, it's green. When it's trending down, it's red. As long as this whole stays green, I'm not closing my long trade. I'm going to keep the trade because price might reverse, go back in my favor again. And it's fine to have these down times where price reverses and pulls back and continues to go up after. So on stock like Spotify, I would be gaming out of the stock right here. On other stocks like Caterpillar, where I had setups on the weekly charts right over here, these are trades that I still hold because the hold is still green. It's still giving me a way for me to hold the trade. If it turns red, I'll get out. But if it's still green, I'll keep in the trade. So even if I have these moves, these pull back down, Coke is an example where the hold is still very green and it's going quite up really well on this. But if you go back to CAT, you can see the whole is still green. On the daily charts turn red, which is totally fine because these trades are based off the weekly chart and a mix of daily charts also. So I still keep my positions on no matter what when the whole is green. And that is just kind of how this works out. Now you can see some of these trades that I've entered recently, like on Dollarama here, a Canadian stock. Price is kind of going sideways and not doing much, but I'm willing to go in with a smaller size just to see if price will actually pull back and start to go up from there. This could be a good time for the stock to go up, and it could be a good place for me to go in with the very small positions. This is not too big. It's giving me sort of a feeler that I can use to see how price will go. And if it goes up, I'm in profit. If it goes down, I close the trade with a small loss. That's not too big, and that makes a lot of sense for me. Another example here is Walmart. Walmart is doing so well. I have a stop loss that's all the way down to here. Right, I always use stop loss also, but these are quite far, and depending on the price, I don't tend to move them too much. I'm just looking at the whole from when to get out of the trade. This is really far. And you can see the daily chart is starting to turn red. The weekly chart is still green. And one of my rules for these stocks that are trending really, really well, like Walmart, it's very rare we have a downtrend on this. Actually, we never have much of a downtrend there. Then what happens is that I wait for the long-term haul at the bottom here of my chart. It's a long-term moving average to give me the signal to go out. That's only good for the stocks that are trending very well in the long term. Like not the stocks like Tesla that are going to go back and forth, but these stocks that trend long term, I'm willing to look at the long-term hold to get out of the trade. So until this turns red, which frankly didn't do for a long time, you can see over here, or all the way back before over here, or then even before that over here, 60 or 55, all the way up to currently 130. This is only based on the strategy with the hold. So I'm not worried about these small moves or these small downturn in the market. These are all good pullbacks, and they will all give us good opportunities to get long and to add more size to our trades. I've got another one here on Verizon, which is going up quite well, going in my favor so far, with a stop all the way down to here. And this seems to not be affected very much by the recent crash in the stock market. But you can see how this kind of plays out, right? We're not worried about the small moves. We don't care about these times where price goes against us. Now, the key thing here is that if you are someone who trades currently, make sure you lower your size. You don't have to trade with the full size. If you risk usually 1% per trade, keep it down to 0.5, 0.25% per trade. You don't need to go all in with this size at all. It's kind of counterproductive. You will have a much tougher time trading if you have big drawdowns now. If you see a 4 or 5% drawdown, that doesn't bother. That's fine for me. But if I go and see like these 20% drawdowns in my account, then I'll start to worry a lot more. And the key thing now is to really focus on the plans and the rules and not the emotions, right? You can do a lot with emotions and try to kind of pull out your trades fast or go into trades that you don't really believe in, but you want to make money quick now. This is a way to hurt your results and not to go out of this market better than you were before. You want to keep your size very low. You want to follow your rules. Take the trades if you have to, but keep the size very small. That is a better way than trying to avoid trades and trying to guess if the trade will work out or not. We can never know if it will work out, so we'll go in with lower size first and add size over time. If you're not sure if your strategy works in this kind of condition, go back to COVID time on the chart. Go back to backtest how the price dropped during COVID. Here I am on Apple. I have a bit of size in this. This is very small size. But if we go back to COVID time, we'll see the market's doing something very similar to what it's doing today. All right, somewhere around here is when this happened, and then all the way over here. So if you can trade well in this, if your setup works in this kind of condition, then your setup will work today the same or very similar. And if you go even back to the recession in 2008, if your setup worked in the past over here, it's going to work well today. You got to understand what context you are best at trading and what context work with your style, what context doesn't work. And for example, if you go sideways for a while, the strategy won't work very well. It's going to work still in kind of on a bigger picture, but it's not going to work well if the price goes sideways for a while. You can see the sideways market. I have some stop losses there. I'm getting triggered a couple of times because price goes up and down in sideways market. Again, small size on this based off the weekly chart, but overall, this is not being good in sideways market. This is working better in trending stocks or trending instruments like trending pairs like Forex. So you got to understand that it's possible to go back in time to backtest your strategy, to backtest your edge if it worked in the past in other crises like this. And if it worked well, then go and trade it now, the same. But lower your size to be comfortable and to not start to second guess trades or start to avoid trades or start to kind of cut trades too fast or move your stop loss against your trade. You don't want to be doing these things now. It's not the right time to do this. So I want to hear your experience below. Let me know in the comment section below how you are dealing with these times in the market. It's not been a fun time for sure for a lot of people. But if you are a good trader, if you know your style, if you know your strategy, you know your edge, you will not have any issues now. For me, a 4% drawdown is very small. I don't really care too much about it. I'm totally fine with it. And if a 4% drawdown is too big for you because of your size or because of it's a big dollar amount for your account size, then lower your risk. We don't have to risk a lot per trade. We can risk very small amounts. We just want to keep skin in the game to learn from this market condition, to be able to experience how this feels and learn from how we can trade best in these conditions. This will come back in the future, so you might want to learn to deal with that stuff now. And we've done a whole training in the past about how to really trade in these volatile markets. My call Tama was a coach in the past, retired unfortunately at this point. Did a whole training about how to trade these volatile markets, what things you got to think about, how you got to adapt your style to it. So if you want to check it out, it's going to be the first link below. You can grab it there. It's a free training. You don't have to pay anything for it. I want to be able to teach you these things and that you can apply them and get results from them, because that stuff is really important. It's going to come back later on. It's useful to know how to deal with these volatile markets. So check out the first link below. If you want to see more of my trading, check out this video here on the screen. If you want to see my results, check out this video here, and I'll join you back in one of these two videos. Ciao.